Good morning. If anyone on YouTube or Facebook can hear my voice, I'd appreciate it if you could at least raise your hand or just send me a quick comment. Let me know that my connection is good. I'm new to streaming on those two platforms and want to make sure we've got you taken care of. Okay. All right. Well, thank you all very much for your attendance this morning. I appreciate you carving some time out. This is a follow-up webinar to my how to purchase a home with just a few $1,000s using down payment assistance programs and grants. So I find that in addition to never having enough money to purchase a home, that credit seems to be a big issue that holds people back. And oddly enough, there are a few tools out there and few things that we can do to get a quick spike in your score that I'm going to share with you this morning. In addition to some things that we don't want to do, there are some things that people, common sense would tell you to pay certain things off, and those can be detrimental to your credit scores and actually accomplish the opposite. So I am flying solo this morning, so I'm going to try to answer all of your questions as we go along. Don't expect too much on the attendance side. These webinars tend to be a lot more manageable, so don't be shy. Raise your hand if you have questions. No judgment, no boundaries. Just ask what you can. I've been in this position myself, so not only do I speak from experience just being in the industry as long as I have, I speak from having to do this myself. So back in 2012, I found myself in a very awkward position where the real estate market was turned upside down, and I had someone that took advantage of that and left me holding the bag financially for a lot more than I can afford, and I had to rebuild back then. So a lot of these tools were things that I had to acquire to build things back up. And being in the mortgage industry, for those of you who don't know, I was actually in the mortgage industry over 25 years. So I acquired a lot of tools with regards to how to manipulate credit scores and get a quick spike. It was about 10 years ago that I gravitated over to the real estate industry. I just got kind of tired of the mortgage world and how there were all of these programs that people could use to purchase with very little money out of pocket that people heard about, but there wasn't a really good, clear path to access those programs. In addition to finding people that could represent you and be your advocate and make sure that you were picking up all the money on the table. So that's where I kind of enjoy is filling that advocate role. So when it comes to finding a house, please reach out to me and my team so we can connect you with what I consider good quality houses. So there's no shortage of homes out there that have lipstick on them right now, and I'm not about that. So anyways, excuse me, let me rate my chair a little bit, and let's get started. Okay, so looks like we've got 8 people there, and let me first of all start off by adding, here is a link to book a call with me. Okay. I am not here to sell you anything. I'm here to just offer my area of expertise with regards to getting your score up 60 points in 60 days. Sometimes it takes longer than that. Sometimes we have to do things to protect our financial world. And that being the case, it's not easy. So when you have to make decisions to whether to put food on the table or pay your bills, I mean, it's not a tough decision. The food's got to be put on the table. I totally get that. And bankruptcy is an option that if I feel like that's the best option, may seem like it might keep you from purchasing a house for a couple of years, but gosh, that bankruptcy protection is not such a bad thing. I mean, it's there for a reason. So I see businesses that do it all the time. So you need to treat your financial world like a business. So anyways, I'll touch on that a little bit as well too. So anyways, thank you all for attending. So let's just jump right into it. You know what? I forgot to hit my record button here. There we go. Okay, so recording. If anybody wants a replay of this, once we're done with the webinar, I will have it posted on Facebook, YouTube. It's actually streaming there live right now. So it automatically, once we complete, actually gets uploaded there. If you look for my YouTube lives or Facebook live events, you're going to see a recording of today there. Plus, I can actually email or text you a link to the recording. So who am I? My name is John Collins. I work at Century 21 Real Estate. I specialize in connecting people with different down payment assistance programs and grants. And like I said, this is a spinoff from my How to Purchase a Home with very little money out of pocket. So today we're going to focus on people that need help, people that have credit scores between 500 to 600. This program is for you. No credit scores. We've got ways to build credit scores very quickly and programs to connect you with if you truly have no credit score. If you have a recent bankruptcy, we're going to tell you how to deal with that. Any recent repossessions, collections, things like that. How do we deal with those? And just anyone that wants to understand how the mortgage world looks at credit and how we can, for lack of better words, manipulate the way that they look at it to get a quick spike in your score. So with that being said, I'm just going to jump right in. So the reason I do this, unfortunately, there is a terrible rental market out there. And right now I find that with what people are paying for rent, at least in my marketplace, the Detroit metropolitan area, southeastern Michigan, two-bedroom apartments just climbed above the $1,350 mark. And right now that's buying about $150,000 house. There's one thing I can tell you in my, oh my gosh, it's approaching 40 years. I think I got licensed in 1987. So whatever that works out, 37, 38, whatever that works out to years of experience, I can tell you rents do not go down. As much as our government might say, hey, don't worry, this is temporary, things will go down. I just don't see it. I've never seen it happen. It may not increase, but once inflation takes hold and those rent increases go up, they don't reduce them. They just hold them for a little while. So, and the reason being, think about it. If you've got an apartment complex and you start reducing payments, you'll have a mass run of people that want to renegotiate their leases. It doesn't happen. They just hold it and wait for the market to catch up to where they are. It's very rare, let's put it that way, that it happens. So there's also a lot of misinformation out there with regards to how to deal with your credit, how to get your credit scores up. No shortage of credit repair companies that charge exorbitant amounts and really throttle the results that you get. In addition, there's a lot of debt restructuring companies that are starting to surface right now. And I'm going to say it a couple of times today. As these debt restructuring companies surface, please do not engage with them. There is nothing. If you are to the point in your personal financial life where you need debt restructuring with one of those companies, my personal opinion is you need to really think long and hard about bankruptcy, because as far as the credit world, once you go into that restructuring, those companies, they consider you in bankruptcy. It's the equivalent of going into bankruptcy without the protection of a bankruptcy court. So if your world is at that point, I think you should probably seriously consider it. So And I'll go over how those companies handle those types of things and why I don't care for them even in more detail. So, and this is just for people that are overpaying for credit. There are a lot of people that go into car dealerships and they just take whatever interest rate or payment works for them. Okay. And don't get me wrong, I'm a payment shopper when it comes for cars too, but sometimes the interest rates they throw out, you don't need to take. Okay. So if we can get your credit score up 60 points, you'd be surprised how the interest rates will just plummet when it comes to auto financing. So that being the case, my goals today, obviously, we're going to teach you how to get your score up 60 points in 60 days. We're going to coach you on how to identify areas on your credit that can quickly impact your score. We're going to help you add new credit if needed. And with each one of these tools that I'm going to give you, I'm going to give you some reasonable, predictable timelines with regards to how long, once you do a certain tool, how long is it going to take for that to affect your score? So I'm going to give you some insight on that, in my opinion. So with that being said, let's just jump right into it. Let's talk about the industry. So when it comes to the mortgage world, and today is all about, getting approved for a mortgage. How do we manipulate those scores to get you approved for a mortgage? Now, in the mortgage world, they look at the three big ones: TransUnion, Equifax, and Experian. Those are the big boys. There are some other credit bureaus out there that have been surfacing over the past few years, but they still focus on just those three. What they do in the mortgage world is they take the middle credit score for most of the programs that I work with. There are some programs that have surfaced over the past couple of years where they'll do blended credit, where they might average it out, that type of thing. But a lot of the down payment assistance programs and grants that I work with still just pull the middle credit score. They use the FICO scoring model 2, 3, 4, and 5. So as much as I'm a fan of some of the free platforms like Credit Karma, Credit Sesame, they use different algorithms or scoring models. Right now, I would say when it comes to Credit Karma, which is the big boy out there, their credit scores are coming in on average about 20 points higher than where the FICO 2, 3, 4, 5 scoring models are. So it's not exact, but Credit Karma is free, doesn't count as an inquiry. So as a result, I am a fan of their what they offer, because it just doesn't. It's just a good way for you to keep track of where your scores are. When you get close to getting your score where it needs to be, it might be worthwhile bringing in a lender to take a look at your score and figure out what we need to do to get you across the finish line if you're not there already. Okay, so we want to look at the middle credit score. Keep that clearly in mind. So if you have a credit score of 500, 600, 700, they're going to look at the 600 score. They're not going to average it. Okay. If you have one at 500, 620, and 640, they're going to grab the 620. We don't care about the low score. Okay. We just let that one go. So what we're going to look at is making sure your high score is above where we need to be, and focus on that middle score to get that up above where we need it to be. Okay. Most of the creditors, so ideally we want to make sure your credit scores are 600 and above. So I always tell people, if your score is 560 or higher, or 580 or higher, we should be talking. Right now, I do have a couple of programs that will work for 580 and above credit scores. So if your credit scores are, even as low as 550, reach out to me. I mean, getting your score up 60, to the point where we need it within a month or two, not too challenging typically. So, and I'm always open to a conversation. So please book a call with me, whether your scores are, 2 weeks out from getting something done, 2 months or 2 years. It doesn't matter to me. I've been working with some people for over 2 years. And the reason it's been that long is, they may have got their score where it needs to be. And then unfortunately, life tends to get in the way of our plans, and they got tripped up and the score went down again. So we just pick ourselves up and dust ourselves off and we go at it again. So believe me, I've been in that world. I know what it's like. And it's just patience, persistence, and we will get there. So Most creditors that you have will only report to one or two of the credit bureaus. So keep that in mind. So if you have a, let's just say a Capital One credit card, chances are they're only going to report to one or two of the credit bureaus. And remember, there are three. So when we look at, that's why some of those scores, even though they're the same scoring model, might have big differences. When you look at a credit report and one might be at, say, 500 and the other two are around 6, that just tells me that 500 credit bureau probably has a piece of negative information that the other two don't have. Now, that negative piece can swing things dramatically for us, so we have to find out what it is and make sure we can work around it. But just the same, like I said, we want to really focus on that middle score. So we also want to isolate opportunities on your credit to get a quick spike in that middle score. Okay. Now, there are, like I said, 3 bureaus. We want to know what goes into the credit scoring models so I can teach you how to manipulate those scores. Number 1, of course, is payment history. Any late payments within, recent late payments really tank your scores. Once you get out of 6 months, it becomes more forgiving, and you really get dinged for your credit scores for any late payments within the last 12 months. And when I say late payments, I'm talking about revolving debt like credit cards or installment debt like auto loans. So late payments on those within the last 6 months can really make it an uphill battle, not impossible. If it's just 1 or 2 isolated incidents, we can sometimes work around that with a good letter of explanation, and I'll tee that up for you. With regards to multiple recent late payments, hard to get things done. So then we're more in for a long-term coaching call. So what I tell people is if you've got just isolated incidents, it's not crazy to call the creditor. So I had someone recently with Toyota. She had a 60-day late on Toyota Motor Credit, which never thought Toyota would do it, but she called them. She went and said, hey, I can't believe I was late. I'm sorry. As you can see, it was an isolated incident. They actually took her 60-day late, reduced it to a 30-day late, and we were able to get her approved. Okay. The next thing is, please do not pay off collection accounts. I'm going to say this a few times tonight, not until you know how long that collection account has been on your credit. Okay. So as far as what goes into your credit scores, payment history, 35% of what goes into your credit score is based on your payment history. So a pretty significant portion. Credit utilization is also another big thing. And credit utilization is just what you owe on your credit versus what the limit is. So if you have a credit card with a $300 limit and a $150 balance, you've got a 50% utilization. Ideally, we want to get that utilization below 30%. My personal opinion, we want to leave a slight balance on the credit card. Try not to pay them down to 0. I find that when you pay credit cards down right now to 0, you don't get as big of a lift in your credit score as if you have a few dollars left on it. Don't know why that is, but that's just the way the algorithms, in my opinion, are working lately. So in addition to 35% of your credit going into your payment history, 30% is with regards to how much you owe or your utilization. 15% is based on the length of your credit history. So if you don't have a lot of credit, don't pay off any installment loans. Without fail, I'll get some people that will pay off their auto loans because they have, I've got 4 payments left. Actually, I had a lender that told somebody to do this a couple of months ago, and it really tripped her up. So she had a credit card and an auto loan. So she paid off her auto loan because it only had 6 months. She thought, whoa, I'm going to pay my auto loan off. My scores will probably skyrocket from that. It didn't. Her scores went down. And the reason is, as soon as she paid that off, she lost that credit trade line. It was paid off and went down to the bottom of her credit is paid off. Okay. So we need to keep those trade lines out there. So don't pay off and close any accounts unless we talk. Okay. So frequency of new credit. So try not to apply for new credit or multiple lines of new credit unless you know you're going to get approved for it. Okay. Sometimes people will go out and go, okay, Credit Karma is giving me 5 options of credit cards with a 80% chance of getting approved. If you apply for all 5 cards and don't get one of them, you've got 5 inquiries, and the algorithms look at that like she might be a bigger credit risk. Your scores get hit hard. Okay. So don't do that. We want to pick creditors that are going to give you a high predictability as far as being approved for them. Okay. And we're going to give you some of those today. All right. So those are the factors. Oh, also types of credit used. Credit diversity is another thing that goes into the credit score. So for example, you want to have an auto loan, an installment debt, a revolving debt, maybe even a personal line of credit too. So I'm going to give you one of the tools today that I'm going to give you that really works well to build credit is a secured loan. And I'm going to show you where to get that. Okay. All right. Next thing I want to do is discuss how to handle some of the big things that really trip people up right now. But before I get too far into it, I want to put my calendar in here. Here is a link to my calendar to book a call. And let's try that for our Facebook and YouTube friends. Good. So please take me up on it. Schedule a call with me. I'm always happy to put myself in your shoes. When we schedule that call, though, try to have as much information with regards to what's showing up on your credit as possible so I can coach you the best we possibly can. All right. Next thing, how do we handle some of the big things? Student loans. All right. So student loans. Whoops. Student loans, right now, a lot of people still have them in deferment, oddly enough. So they're not in deferment. They came out of forbearance after COVID, but we want to keep in mind that we can't issue a loan. You can't get financed while your student loans are in forbearance or deferment. Okay. So we need to pull them out. I always tell people, try to get an income-based repayment plan depending upon where the balance is on your student loans. Okay. I have a couple of programs that will go off that income-based repayment plan. Here's an example. I have someone that's still in school, part-time. She had like $150,000 in student loans. So if the typical path is that most lenders are going to take 0.5%, which would be $750 or $7,550, $7,500. They'll take 0.5% of that and calculate a payment. Okay, I'm sorry, that'd be $750 a month is going to get counted against your debt to income ratios. So there is a program, actually 2 programs right now that will work off of your minimum payment. So if you set up a minimum income-based repayment at $10 a month, $20 a month, that's the workaround for that. Okay. If your student loans are in default, I kind of get excited because that's a very easy fix. We just take them out of default. Usually if your student loans are in default, it's really pushing your scores down. So it's not uncommon for us to be able to pull your student loans out of default, do an income-based repayment plan, and within about 90 days, you're going to see your scores skyrocket, as many times as high as 100 points. So I've had people whose credit scores might be in the toilet because it might be 550. We take it out of default, and 90 days later, it's showing up as paid as agreed. You've taken something that's a negative, and now it's going to show up as a positive. It used to be a lot easier. Okay, they used to do that right away. Now they won't do it. Most servicing companies for student loans won't do it unless you've made 3 payments. So that's why I say 90 days. Okay, and they will not let you make those payments all at once. That was another workaround we used to do, but they're wising up to some of our tactics. But so you heard me talk about income-based repayment plans. They are out there. A lot of times The student loan companies might tell you, oh, your income's low enough, you don't need a payment. Okay, so zero is your payment. Zero is not acceptable in the mortgage world when it comes to getting a house. Okay, and truth be told, zero doesn't do you any favors because your interest clock keeps ticking. You're going to watch. I mean, student loans could 10 years from now, you borrow 100,000. Heck, it'll be up to 150,000. They don't tell you that in the fine print. Okay. And unfortunately, student loans don't go away. You have to deal with them. So unless you work for a nonprofit or, a public position, you really can't make these go away. Bankruptcy does not allow you to wipe out student loans. They're with you for the duration. So we need to find ways to deal with them. There are ways to put things in place that they can be extinguished after a period of time. And if you want those types of tools and need that type of help, please schedule a call with me. Always happy to learn your situation and point you in the right direction there. The next thing I want to talk about are repossessions. A lot of people that I work with are very generous. A lot of them go out and co-sign loans for family members who unfortunately don't make the payments on the loans, and then the car is repossessed and it falls on your credit. Or sometimes people go to some of the what I call B car lots, car lots, buy here, pay here, stuff like that, where you're going to buy a car and you drive off and 3 weeks later the transmission dies or the engine dies, something serious, where it's not like you take it up to the shop and get it fixed for a few hundred or even $1,000. So sometimes you have to make some tough decisions and let those cars go. I get that. Okay. So there are certain ways that we want to deal with those repossessions. Number one. Number two, it depends on who the creditor is. There are some creditors that are professional collection artists. So I want to make sure if I know who that creditor is, I can better coach you on that. But sometimes it's wise where if it's not too old, where we could actually reestablish payments. Okay. Get some on time, get a couple of months of on-time payments, get it reestablished, get you qualified for some of these down payment assistance programs or grants, get you into a house. And then what you do after closing, that's up to you. No judgment there. So sometimes I'm just here to get you into the house. And I understand sometimes if you were sold a lemon, it's a bitter pill to make payments on that. So I get it. Sometimes it's worthwhile if it's a small amount of money just to pay off the balance and move forward. So I'll give you a schedule call with me if that's your situation. Happy to go over it and let you know what I would do if I were in your shoes. The next thing I want to talk about is bankruptcy. There's actually two types of bankruptcy for personal. There's Chapter 7, and that's where you just wipe the slate clean. And there's Chapter 13, where you're reorganizing. Okay. Now, if you do a Chapter 7, we have to wait for 2 years after the discharge date before we can do anything. But we want to start building credit right away. Oddly enough, it's very easy to build credit after a bankruptcy. It's not uncommon after a bankruptcy to pick up a credit card. Actually, it doesn't even have to be secured. And the reason that is, a lot of creditors want to give you credit right away because they know you can't do another bankruptcy for several years. So you're good credit risk at that time. So pick up a credit card right away. Maybe a secured loan. There's a few things that we can do. I mean, obviously, we don't want you to go down that same rabbit hole that puts you into bankruptcy again. We want to use it responsibly. But if we pick up a couple of lines of credit shortly after your bankruptcy, within about 8 to 12 months, you're going to see your credit scores are going to go possibly above 700. And the reason that is the algorithms that generate your credit scores are smart. They know you just got a free pass and that you have no other debts, and your chance of repaying the debts are significantly higher since you're not bogged down with other baggage. One key thing is we cannot have a late payment after a bankruptcy. If we have a late payment after a bankruptcy, it's going to affect your credit scores even harder because those algorithms know you just got the pass on the bankruptcy. So keep in mind, the algorithms that are generating credit scores are extremely smart right now. So with that being the case, we need to think just like a human. We need to think about things before we do them. So whatever you can do to keep from having a late payment after a bankruptcy, that's a tough decision. I get it, but it is huge. Chapter 13, on the other hand, that's where we reorganize everything. So you're going to take all your debts, they're going to put it into a bucket, and then they're going to negotiate that bucket down. Okay, so if you have $30,000 in debt, they're going to take that debt, put it together, maybe give everybody 80 cents on the dollar, which might be $24,000, and then you're going to repay that $24,000 over time to a trustee. The trustee is going to take that money and then dole it out to the creditors. Okay, could be 5, could be 6, could be 7 years. Chapter 13 is a very, very long haul, in my opinion. Okay, the payments are not cheap, and I have a lot of respect for people that make it through Chapter 13. But I'm like the tail end of the baby boomers. Okay, so I was raised to, the honorable thing is to pay back your debts that way, and I get it, but it's maybe not the best business decision. If you have a choice, sometimes Chapter 13 isn't the best way to go, because when you get in there, those payments are steep. If you can't do a Chapter 7, really think long and hard about it. Okay, Chapter 13 is a tough thing to do. Now, the good thing about Chapter 13 is once you're in it, and after you've made 12 payments on time to your trustee, you can actually get mortgage approval and qualify for some of the down payment assistance programs and grants that I help connect people with. Okay. After your Chapter 13 is paid off, though, right now it seems odd, but you have to wait 2 years after you pay everything off. So I think that they're proposing changing that, but as of today, I haven't heard anything. So, but if you are in a Chapter 13, there are some options. Okay. I've only had one trustee ever push back on that. And we were actually, the buyer's attorney was able to get around that, and we were able to get him into a house. Okay. So that's how we handle different bankruptcies. Collection accounts. Oops, sorry about that. Collection accounts. All right. This is a big one. If you have any collection accounts on your credit, you need to know how long they have been there. Okay. Keep in mind, these collection companies, they're professional money. I mean, their tactics are very slimy, to say the least. Okay. If it's over 2 years old and it's on your credit, just leave it alone. Do not pay it. Okay. If you pay a collection on your credit that's over 2 years old, my opinion is you're just going to reactivate it. It actually will drag your scores down. So think of it this way. If you have an old cable bill, let's say that's $300, and it's over 2 years old, if you go to the cable company and pay it, they're going to report it on your credit the following month. Cable bill collection paid March 2025. You've reactivated. It shows up on your credit more recently. Your credit scores will go down. Okay. So I always tell people, if you've got some old collection accounts, please just leave them alone. If they're under $1,000, and chances are, if they're medical, don't pay anything. Okay. Medical collections, just let those sit. I don't care how old they are. They don't affect your credit scores any longer. If they are, 0 to a year old, the collections, we may have to deal with them. It might behoove us to pay them off. It could actually increase your scores. But what I'd like to do is run your credit through a credit simulator first, just to give you an idea of how your credit score is going to react paying that debt off. Now, for collections that are 1 to 2 years old, it might be worthwhile picking up payment arrangements, things like that, just to get us across the finish line so we can deal with it. But like I said, things that are 2 years old, don't worry about it. We might have to go back and deal with them once we get our lender approval, but we'll cross that bridge when we get there. So what I'm looking to do with all of these techniques and tools that I'm about to give you, I'm looking to get this 60-point lift in your score, or whatever, lift in your credit score as soon as possible. Once we get your score where we need it to be, we have the lender pull your credit, and that locks the score in. Typically, it's going to lock it in for 90 days. So if part of the approval process is that you have to pay off that old cable bill that might be 2 years old, fine, we'll pay it off, and your score will probably go down, but that doesn't matter because we already have your credit score locked in. Okay. So that's what I'm talking about when I say push that off as long as you can. And sometimes if the collection account's below a couple $1,000s, the approval process doesn't even ask us to pay those off. But if it does, then, we want to do it. Okay. So that's how I handle collection accounts. Next, these are my steps to actually get you approved or get your credit score up as much as possible. Okay. Excuse me 1 second. I'm getting an alert. Okay. All right. So I apologize if things are a little choppy. I just got an alert that my connection is not there. Don't know. I live on the west side, and every now and then when the weather gets a little challenging, my internet connection gets a little unstable. So I can see it's starting to snow quite a bit out there right now. So anyways, these are my steps for 60 points in 60 days. First thing we want to do is we want to get a copy of your credit report. So you can go out to annualcreditreport.com. They will give you a free credit report. We want to see what's on there. I'm not as concerned. You can pay for credit scores and get a copy of them there. You don't need to, though. In fact, I would rather you just get the free credit report from annualcreditreport.com. And then we can get the credit scores from maybe one of the free platforms, Credit Karma, and then maybe Experian, and we'll get all your 3 scores that way. Once we acquire that data, we want to look at, okay, what are your middle score and what's your high score? If your high score is in the area where we can get something done, we're not going to worry about it. If your middle score isn't, then we're going to attack what trade lines or what things are on that middle credit score that we can manipulate to get that up above the threshold of where we need it. So like I said earlier, not everything is you're not going to see all the same accounts on all 3 credit bureaus because a lot of these creditors only report to, 2 of the credit bureaus. We're going to focus on that middle score. Like I said, we want to understand what's on there and what's driving those low scores down. Are they late payments? Are they collections? Is it your credit utilization is maxed out? So those are things that we can take care of. So we do need at least 3 trade lines, and a trade line are just 3 accounts. Now that's on all 3 reports. Okay. So a trade line, it can be new and active. It can be old and closed. If we don't have those, we do have the ability to build credit by adding alternative trade lines. So if your credit scores are high enough, but you don't have a lot of credit, we can get things put on your credit report too. If we're in a situation where we aren't, 90+% confident of what the outcome is going to be, we may want to run your credit through a credit simulator. So I might connect you with a lender that can pull your credit, see all 3 credit scores, run you through a simulator, and tell you exactly what we need to do. Okay. I don't like to do that unless we're pretty close. Okay. The next thing we want to do is we want to see if we need to add new credit. We can do that through secured credit cards, secured loans, or maybe even asking a friend or family member if you could be an authorized user on one of their cards. Not as awkward a conversation as you may think. It doesn't hurt. Hey, I don't need money from you. If you could add me to one of your credit cards to add a trade line, I can get proof for a loan, but I just don't have enough trade lines on my credit. And if you can add me as an authorized user, I'll have enough trade lines where I can buy a house in 30 days once that populates on your credit. Okay. I don't need the credit card. So it's not as awkward a conversation as you think with a friend or family member. I mean, who doesn't want to help out a friend or family member? Now, if your credit is, in the low 500s, high 400s, then we may want to bring in the services of a company that might draft some dispute letters to challenge some of those things to get them removed from your credit. That's rare. I'm not a big fan of some of the credit repair companies that are out there right now. Basically, what they do or how they operate, or more importantly, how they just tend to monthly bill people, and you just don't get the results that you used to using those companies. So I'll go into more detail in a few minutes on those. Okay, so here are the do's. First thing we want to do is we want to subscribe to some of the credit monitoring services and get your credit reports. Credit Karma is a good one. I like it. It's the biggest one out there. They will give you the TransUnion and Equifax credit report and credit scores. Go to Experian.com. That'll get you your Experian score and your Experian credit. We want to look, if you have any credit card out there, we want to look at your credit card limits. If they're maxed out, pay them down below 30%. Right now, that maneuver is getting big bounces. If you have let's just say a $300 credit card and you have it maxed out and pay it down below 30%, that could increase your score 30, in some cases even 40 points. Right now, the algorithms that generate the credit scores are giving a bigger lift for paying down your credit card balances than I've ever seen before. And the only thing I can think of is that the algorithms are getting smarter. Okay, credit card default rates are skyrocketing right now. So if you have the ability to actually pay down your credit card, they're considering you a much better credit risk, and as a result, giving you a larger bounce than they were 2-3 years ago. Okay, again, pay your credit cards down below 30%. My opinion, please don't pay them off. If you pay them down to 0, and you don't have a thick credit profile, sometimes the algorithms may look like you just don't use the card. And don't get me wrong, your score will go up, but in my opinion, it'll go up maybe a point or two higher if you leave a really small balance on it. And when it comes to some of the programs that I help connect people with, it's 1 point can make a world of difference. Okay, one of the programs is 600. If your credit score is 600 or above, you're in. If it's 599 or out, you're out, or less, you're out. So that 1 point can make a world of difference. Okay. Now, can we coach you up that 1 point? Yes, but it just takes an additional, 30 or 60 days to sometimes do it. Ask a friend or family member to be added as an authorized user. I'm going to go over that in a few moments with regards to things to look for. Open up a secured credit card or secured loan. I've got a great secured loan I'm going to tell you about in a few moments that is really can bounce your credit scores. Now, if you don't have anything on your credit, you need to start gathering information that we can have added to your credit report, be it rent, cell phone bills, car insurance. I'm going to give you a list of more things in just a few moments. So we want to add those trade lines. So these are the things that we want to start doing right away. If we have credit or collections over 2,000, might be a good idea to start making payment arrangements with them. If you can get them to engage and make payments with them, as long as you paid them for 90 days, the lenders will accept that, and you won't have to pay that collection off. Okay, so things that we need to take into account. Okay, things that we don't want to do. Don't apply for new credit unless you know you're going to get it. Okay. And if Credit Karma tells you there's an 80% chance that you're going to get something, don't believe it. Okay. Give me a call, bounce it off me. I'll be happy to give you my input and point you in the direction of cards that will get you approved right away, or in my experience are the most lenient ones. Don't blindly pay off your collections. I know I've said it a few times, but this is a big one. Okay. Over 2 years, leave it alone. We'll negotiate those if we can. And that's another reason we don't want to pay off those. Okay. If we get your credit score up where it needs to be, and the bank comes back and says, yeah, we're going to approve the loan, but we want that collection paid off. Okay. Now we can go and negotiate with them. We can negotiate those balances down to pennies on the dollar. We don't have to pay the full price because we're already approved and locked in. Okay. Anything over 2 years, like I said, case by case. Medical, just leave that stuff alone. And like I said, 1 to 2 years, we want to run through a simulator, and 0 to 1 year collections, we need to address those on a case by case basis. Sometimes we need to pay those off. Okay. Don't pay off credit card balances to 0. Leave a little bit of balance on there. Don't pay off any installment loans. We touched on that before. Don't become an authorized user on a brand new account, or an account with any late payments, or an account that doesn't have a high utilization. And please never employ the services of a debt consolidation service. And they know the default rates are skyrocketing right now, and those companies are starting to advertise. Again, by doing it, it's going to show up on your credit report that you are in debt consolidation. Okay. All lenders look at that just like you're in bankruptcy. Okay. So now they're going to look at it like you're in bankruptcy, but you don't even have the protection of a bankruptcy court. The other thing is, these debt consolidation companies, they're here to make money. Okay. So they're going to say, oh, John, make all your payments to us, and then we're going to pay off all your creditors, and we'll negotiate the balances for you. Sounds like a great idea, but you know what they do? They take all their money up front. So whatever payments you make for those first 6 months go directly to the debt consolidation company. Then after 6 months, they start to make the payments out to your creditors. By then, your creditors are furious. They won't talk to you. So again, you might as well just jump right into bankruptcy if you're to that point. Okay. And at least be afforded the protection of a bankruptcy court. All right. Next thing, credit building tools. These are the tools to get your scores up. Number 1, secured credit card. There are a few different companies out there. If you go to Credit Karma, try to stay with Capital One. Capital One, I think, does a good job. Okay. You give them $300, they're going to send you a credit card with a $300 limit. Okay. Good, reputable company. They report to 2 of the credit bureaus. Sometimes you can go to local credit unions. I personally love working with Michigan First Credit Union. I'm in southeastern Michigan. They're headquartered in Southfield. They've got branches. I mean, their presence has just blown up over the past 10 years. And the reason I like Michigan First, and I probably shouldn't say this, but you'll begin to know I wear my heart on my sleeve. Michigan First Credit Union helps the people that need it. They just don't chase the money in the suburbs. Okay. So they have credit building tools. Their secured card isn't as good as Capital One, and not as good because they require that you pay $570. They charge $70 to get into it. And then they're going to give you a credit card for $500. So it's a little bit more expensive. And I get it. When you're in a financial pinch, an extra $270 is a big difference. Okay. And sometimes it's nice to just have different creditors. Okay. And maybe not have all your eggs in that Michigan First basket. So, but they do offer it. Now, once you get these secured credit cards, you need to use them right away. Go out and charge a tank of gas the same day. And the reason that is, the quicker you use it, the quicker it's going to get reported to your credit. Okay. The quicker they're going to push that data out to the credit bureaus. So you're going to get the lift in the score. Now, typically you'll need to make one payment on it once you do it in order for things to trigger in, but you'll probably get a good 20 to 30 point bounce in your credit within 30 to 60 days of doing this. Okay. Try not to charge more than that 30% balance, or try not to let that utilization go above 30%. Okay. I understand that sometimes life gets in the way and we need to do that. Okay. So here's a little tip, a workaround for it. Once it shows up on your credit, especially in Credit Karma, they're going to tell you when the reporting date is. Okay. Let's just say the reporting date is February 20th. Okay. And I need to buy groceries. Okay. I can buy them today, charge it up to $300, use all of it. Just make sure I pay that balance down before February 20th. And then what'll happen, they report the balance as of the day, the day that they're going to report it. So if you paid that $300 down to $90 on the 19th, they're going to report it $90. You're going to get the best. So there's a way to manipulate those balances along the way. I get it. When you have a family, it's hard that way. So you can actually work it that way. You just need to know when the reporting date is so you don't get tripped up by it. And it's all done electronically. So it's not like you even need a couple of days. You probably want to pay it a couple of days in advance because they may not report till it clears, if that makes any sense. So just keep that in mind. So secured card, secured loan. This is by far and away my most favorite tool. Okay. And it's actually through Michigan First Credit Union. There are a couple of other credit unions that offer it in the area. Their names escape me right now. One's in the city. I think it's Credit. I don't want to misquote, but Michigan First Credit Union has a secured loan. This can actually get your score up 40 to 60 points in 45 to 90 days. Now, what is the secured loan? First of all, you've got to open an account with Michigan First Credit Union. Okay. That's easy enough. If you walk into any one of their branches and tell them that you want the secured loan, most of the people light up because they know this is a powerful tool. I tend to work with the branch that's actually in Novi at the Walmart. Okay, so there's a branch there if anybody's on the west side and wants to know, or their headquarters is in Southfield. So what they do, you give them $525. They're going to charge $25 to set this up. They're going to take your $500 and they're going to put it in a savings account and lock it down so you can't touch it. Okay, it's going to show that it's in there, but you just can't withdraw it. At the same time, they're going to give you a loan for $500. So they're going to put $500 into your checking account. You're free to use that $500 any way you want. It's your money. Okay. Now they're going to take, this is a 6-month loan is what they're giving you. They're going to take $80-something a month out of your checking account, automatically withdraw it to pay off that $500 loan. So make sure you've got the money in there to pay it. Now, what's great about this program is when it shows up on your credit, it shows up as a personal line of credit. It does show as secured, but it is a personal line of credit, which is one of the hardest things to get. That's why your score lifts up so high. Okay. The downside is after 6 months, once this loan's paid off, you kind of lose. Your score will be up higher because you paid something off, but it goes down a little bit. So sometimes you may have to go back and redo it again if you don't buy something within 6 months. But great tool. I actually used this tool for my daughter when she went away to college 6 years ago. And it was funny because she was 19 years old. I ended up co-signing a car loan for her and did this, and we added her to a credit card. She had a credit score in the mid 700s and she was like 19 years old. So she had certainly a higher credit score than I do. And it was kind of funny. So, because my sons, always tease me that I never did that for them. But then again, they're my sons. They're not my daughter. So, princess. So anyways, that being said, it really helped put her on the right track. And fortunately, she's been blessed and she's been able to keep it there from what I understand. So secured loans, I know firsthand these work. So if you have to choose this. Okay. If your choice is between secured credit cards, secured loan, choose the secured loan. If you're blessed and you can do both, awesome. Your scores will go up above 60 points doing those two maneuvers, plus all the other tools, the other ways I taught you earlier how to manipulate your scores. All right. Next thing, authorized users. Authorized users only works 90% of the time. Okay. There is something that I want to share with you. The reason it doesn't always work, many years ago, they realized that this is what people did to manipulate credit scores. So it doesn't always work. But the reason it doesn't work is that if they report your start date for your authorized user card that you're being added to as the actual date that you do it, which only happens about 10% of the time, you're going to get a lift. You're just not a lift that we'd hope for. Okay. So And the reason that is, here's a perfect example. I had a young lady who grandma actually added her on her Sears card. Didn't even know Sears cards were still out there, but she had a $20,000 limit on her Sears card. She added her granddaughter to it. She only owed a couple $100, so obviously she's still shopping there. How, I don't know, but maybe online. And her credit scores shot up almost 100 points. Now, this credit card had an open date. It was either in the 70s or 80s, which was before she was born. So what happens is the people that are adding you as the authorized users, the phone jockeys and the call centers, their calls are all timed. So for them to add somebody is a manual entry. And a lot of times they don't put in the date that you're being added. They just automatically add you to the card and let all the other data flow through, which adds that old date. So you're going to get the benefit of having that card for many years. So the older the card, the better. Okay. Like I said, this works 90% of the time. But if you get somebody that's on their game in that call center and enters the start date, the open date, the date that you're added as an authorized user, then you'll still get a lift. You just won't get that huge lift. Okay. So make sure if you're going to be added as an authorized user, it is a seasoned account with a low balance or utilization. It has good payment history. All right. Next thing, alternative trade lines. Now, if you don't have credit on your credit report right now, and we need to add alternative trade lines, we can do that. We can add rent, auto insurance, PO box payments, storage units payments, cable bill, cell phone bill, renter's insurance, utility bills, monthly subscriptions, Netflix, gaming, gym membership. I had a young man last year, basically had no credit score. We added him as an authorized user to his future mother-in-law's account. So that gave him a credit score, not enough trade lines. He was a big gamer. We added, I think it was 3 different gaming subscriptions. One was to PlayStation, Xbox, and I don't know who the third one was, but he had $9.95 a month taken out of his checking account every month routinely for the past few years. We just went back, got 12 months bank statements showing that these amounts were taken out, gave it to the lender. The lender had that information added to his credit report, did a rescore, got his credit scores up where it needed to be, and he was able to take advantage of one of the down payment assistance programs that I help connect people with. So just that easy. Well, I shouldn't say just that. There's work behind it, but still, it can be done. Credit monitoring services. Okay. I am a big fan that you should do this sooner than later. Okay. Credit Heroes, a good one where you can get all 3 credit scores. You do have to pay for it. I'm all about free. Experian, you can go to Experian.com and you'll get a free credit score from them. It's your Experian score. You also go to Credit Karma. Register there. You're going to get Equifax and TransUnion. The nice thing about going to those free platforms and using it, you're going to know on each credit bureau how your credit score is responding to the certain maneuvers that you're doing. Okay. And you can set up alerts where anytime something changes, you get a quick alert. So you can take a peek at it, reach out to me, and we can see whether you're within striking distance. So it's important that you get to know your credit. Sometimes I know it's painful. It may not be the most prettiest picture going out to Credit Karma and seeing a credit, but we've got to do it. We've got to know what you have in order we can help, so we can help you. Okay. So those are the credit monitoring services. Credit restoration services. Okay. There are companies out there, Lexington Law, National Credit. All right. They have a place. What these companies do, they actually, they charge you on a monthly basis. Okay. What I don't like about them is once you start paying them, regardless of, it's like a hamster wheel. They don't tell you when your credit scores are high enough. They just keep taking money out of your checking account every month. Now, if your credit scores are below 520, it may not be a bad tool to do for 90 to 60 days. No more than that. Okay. What they do is they actually look at your credit. and challenge things on your credit report. So there is what's called the Fair Credit Reporting Act that all creditors have to comply with. And there's kind of a loophole in the system. So what that loophole is that if you inquire about a derogatory item on your credit, the credit bureaus have only 30 days to investigate and get back to you. So these companies take advantage of that. So what they do is if you have, let's just say 5 collections on your, let's just say you have 10 collections on your credit report, or 5 collections and 5 late payments, whatever, 10 derogatory things. These credit restoration companies will go out and challenge those things. Now, typically, you don't want to challenge more than 5 items at a time. And the reason that is, as the Fair Credit Reporting Act says, if you just say everything on your credit report is wrong, the credit bureaus can set that request aside as frivolous, because the chances are 10 items all being wrong, probably not right. They know, so they won't even respond. Okay. Now, some of these companies, if they write these letters for you and say they only write maybe 5 things at a time and send it in, it used to be where they would have 30 days to investigate, get back to you. If they can't do it within 30 days, they have to remove the negative item. Okay, so basically they're just playing the game of time. Now, what's happening now is some of the credit bureaus are responding and saying, hey, we just received a letter that we don't believe was from you. We believe it was from a credit restoration company. And we don't feel as if we have to respond to that without your authorization. So they're going to stonewall you every way they can. Okay. So the credit agencies are fighting back against these. So that's why they just don't have the power that they used to. Okay. But if your credit scores are below 520, this might be a good way to get some letters out and challenge things. Okay. But certainly no more than 3 to 6 months. Because what happens is when those letters go out, the credit agencies have 30 days to respond, to go to all the creditors that are providing the negative information, have them confirm that the debt's accurate. They have to get back to the creditor, and then the creditor has to get back to you, all within 90 days. Okay. It used to be very hard for them to do that. And I used to be able to say, hey, 33% of the items you challenge are probably going to fall off because they can't hit the timeline hurdles. Now, with the technology involved and the way that they're stonewalling, you're only going to get, you might get 1 item each time it happens. Okay. Which is still a win. Okay. But like I said, they are stonewalling. So I would like to try to use some of the other tools in conjunction with this. That's the other reason I don't like some of these companies. They don't teach you about adding new credit. So I've had people that have had credit scores in the low 400s. They use these credit restoration services, and their credit scores a year later maybe get up to 550, maybe as high as 580, and then they stall. And the reason they stall is you got to build new credit at the same time as you're taking care of this derogatory information. Okay. So for those reasons, not a huge fan of these credit restoration companies, but they do have a place. Okay. So where do we go from here? Just shared a lot of information with you. Number one, you need to, if you haven't been to my How to Buy with No Money Down, my top 10 ways to purchase with no money down, please attend one of my webinars. Let me give you a link to that. And okay, here is, well, first of all, Control V. Okay. Here is a link to my website to register. And copy link. And let me put that down here. Great. Here's a link to my website, nodownpaymentrequired.org. Go there. I do webinars a couple of times a month. I actually have a vacation coming up, so it's going to be another month before I do my next one. So please, or just look at my YouTube channel or my Facebook channel. You're going to find, or Facebook page, I should say, you're going to find that there are videos out there. I've got the replay from my webinar that I did last Wednesday, and I've got a few others out there too. So here is a copy to my YouTube channel. If you could do me a favor, okay, this is all I ask for all the educational content. If you could go out to my YouTube channel, follow me, I appreciate it. It kind of helps wake up those algorithms so I can try to share the message with more people on how they can become homeowners using some of these down payment assistance programs and grants. Here is a link to my Facebook page. Just takes a couple of minutes. If you guys could go out there and do that, I would certainly appreciate it. Oops, I gave you the wrong one there. Sorry. Here is, okay. Here's my Facebook page. And here is my Facebook page here. So if you could do me a favor, just go out there, follow me, friend me, share the message. If you have any friends or family members that can benefit from homeownership or is stuck in this renting rut, please just pass my information along. I hope you realize that I have a passion for helping people in this space. And very few things make me feel as good as some of the wins out there for people that can get out of that renting rut. Now, I forgot to ask any questions. Gosh, I've rambled on here for about a little over an hour now. So what kind of questions do people have? Carmina, Jasmine, Jennifer, Latoya, Ashley, any questions you guys have out there? Or did I do a good job putting you to sleep? All right. Well, I certainly appreciate everyone's attendance today. Thank you very much for saying that. I appreciate you. I'm glad all the questions are answered. I know I throw a lot of information for people out there, and I apologize for that. Please schedule a call with me. Happy to learn your situation, dive in, tell you what I would do, how we could build credit, what levers there are to pull, what buttons to push, and how to get you in a position to purchase in as short a period of time as possible. If not for you, for your friends or family. Okay. My team and I service the whole Detroit metropolitan area. And if you happen to stumble across this video and you're outside the Detroit metropolitan area, I've got a great network of agents who are dedicated to helping people tap into these programs and negotiate the deals so you can actually get into a house with just a couple $1,000s out of pocket. So we're well over our hour mark today. I want to thank you all very much for attendance. Your time is valuable, and I appreciate you spending it with me. And if you're in southeastern Michigan, try to stay warm. So, and hope our paths cross soon. Thank you all for attending. Have a good weekend. All right. Goodbye.